All right. Good morning, everyone. Can you hear me and see my screen? Go ahead and type down in the comments that you can hear me and see my screen, and we'll get started here. Happy Thursday. We are going to be live trading today, and as soon as you guys confirm you can hear me, we'll get to um, we'll get into it and get into the paths, what we're going to be doing today, and the trading that we're looking at. So. Thank you, Daniel. All right, guys. Well, let's get started then. If you are new here, my name is Jacob Gabbard. This is Invest with Jacob. We are going to be demonstrating our IWJ Pivot Point Pro. It is a trading view indicator, and you can only use it in trading view. I'm in trading view right here. Um, and it's a very simple indicator. It gives you buy and sell alerts, and it does it based on price action. So most indicators are backward looking, where they wait for moving averages to cross or things like that. Ours is forward looking. It's looking at key levels, and it's looking at about 175 different things. And some of those do include moving averages and other stuff that kind of, what's the word I'm looking for? They kind of complement price action. But most of the basis of the indicator is based on trading off of very strong levels and calculating all of that for you so that you don't have to figure out where those strong levels are. It is looking for reversals, so it is always going to be trading, looking for basically tops and bottoms, not exactly. And it makes it really simple. So a lot of people who are day trading and swing trading have 3-4 screens open, and they're trying to watch 100 indicators and figure it out. This calculates all of that stuff for you, makes it really simple, and gives you really strong entry points. If you're new to this kind of trading, or you're wondering about it, or you have struggled with it in the past, there is a mindset and a overall attitude you have to come into trading like this with, and that is that you're looking for an edge over the market, meaning that you're going to trade the setups that are highly probable to go in your direction. But highly probable in trading is like 65% to 70%, which means you're going to lose 3 to 4 out of every 10 trades. However, the risk reward structure sets up well and allows for that to really press and make the edge bigger because of how it's set up. So most trading systems work. You just have to follow the rules and then apply that edge to the market relentlessly and over again, because it's all about probability and time, right? Just because something is 6 out of 10 doesn't mean you're going to win 6 trades and lose 4 trades every time you go through 10 trades. You could win 10 in a row. You could lose 10 in a row. You could win 50 in a row and then lose 15 in a row. You could, get 6 and 4. It goes a lot of different ways. So what you need is a trading plan with good risk reward and good structure that tells you how to do that. And you can create your own plan, or you can use a tool like IWJ Pivot Point Pro, which makes it super simple. But as long as that plan is disciplined and you have the right edge and probabilities and right setups, you'll beat the market over and over again. I'll put up our numbers here in just a minute. Right now for the year, we are up $29,000 on a $100,000 account, and that's based on trading 25 contracts. And the reason that I say all that is because, January was a record month. February and March were good months. April was an okay month, and May was a losing month. Sometimes you have losing months. There's no tool out there that's going to get you rich quick or be 100% perfect, and you have to be able to understand how to size your trades properly, how to trade properly, and how to do those things so that when you do have a losing month, and it was a small losing month. We lost $2,000 for the month. We were up $31,000 after April. We're up $29,000 now. So that alone should tell you that we don't hide anything. If we have a losing month, we talk about it and say, here's why we have a losing month, and here's what happens, and here's how trading works. Most people are out here trying to peddle some BS, and that's just not how it works here. So just to give you an idea, when we enter a trade, so this flat line here is going to be our entry. We close half of the trade when we make 20% profit. Okay. We also have a stop, so sometimes we stop out. So that's the bottom. So here's your stops down here where you stop out. This is your loss. Up here's your first profit. You closed half the trade. These basically cancel out. So you have enough winners to cancel out the stop outs. And then what you get is on the second half of many, many, many trades, you get runners where they keep going, right? So you take 20% and maybe it just doesn't go any higher and you stop out, so you made a little bit of a profit. Well, a lot of trades make to 20% and keep going, and then we get more profit up here. And this is all basically pure profit because the 20% cancels out the stops, and then everything over 20% when they run becomes profit. So that's the model. That's how it works. And it's been super successful over several years. I've been doing this a long time. And this tool, so for instance, yesterday, if we go back to yesterday, it may not look like it, but this one does look like it because it comes all the way down. This was a really nice win on a sell. This was a sell that was a winner. This was a sell that was a winner. And this was a buy that was a winner. 4 trades and that won. And we actually had one small loser just because of how this trade played out. It spiked down really fast, came back up and stopped us out, and then came back down and gave us a win. So we had 4 winners, 1 loser yesterday for a really nice day. Tuesday, we'll just go through the whole week real quick. Tuesday was a trend day. So there's training. We'll go over that in just a minute. When you have a trend day where they move above the pre-market high, test VWAP and hold, then you don't take these sells. So these are not losing trades. They're just trades we didn't take because we hit a trend, and we don't trade against trend days. We're looking for reversals, and the Pivot Point Pro is always going to look for reversal. This blue line here is called a high value volume level. It tried to sell off of it, but on trend days, they break through those levels. So a trend day is, if we go over here to our day today, you'll see that we have pre-market high up here at 599.73. If they break above that, come back, test VWAP and the 21, which is my black and blue line here, and hold, and then continue and break back over this high. That's a trend day, meaning it's going to trend in that direction, and we don't counter trend trade it, so we're not trying to trade sells. Conversely, on the bottom, if they break the pre-market low, come back up, test the 21 and VWAP, and then come back down and break this low right here, so they break down, that's a trend day down. And we don't trade buy signals on those days. So on Tuesday, it was a trend day. And then on Monday, that was Tuesday. And then on Monday, we started off the day with this sell right here. And this sell was a huge winner, really big winner down here, all the way from 588 down to 585. So a $3 move straight down. Awesome trade. And then we didn't have any trades the rest of the day because we stopped trading at 10. We had one sell right here that didn't work out. So we had one really big winner, one small loser, so a winning day there. And then we stopped trading at 10 a.m. because the market slows down, volume dissipates, and you get choppy markets a lot of times in the second half of the day. So that's kind of what we're trading today and what this is. The blue is post-market trading. The yellow is pre-market trading. It just transitions at about midnight. And we don't trade any of this over here because it's very choppy and ugly. But we do need it on for the market to kind of understand how, or the indicator to understand where it's at in the market when it opens. So we do need pre-market and post-market trading on, but we don't trade that. We only trade during regular trading hours. There are a few rules, not many, and they're very simple to follow. We have a 3 strikes in your out rule. So if we trade 3 times in the same direction, in other words, they give us a sell signal, it fails, a sell signal, it fails, a sell signal, it fails, we're out for the day. We don't trade anymore. We just go on to the next day. And trend days, we don't trade the counter on trend days. So if it's going up, we don't trade sells. And if it's going down on a trend, we don't trade buys. And then we take profit at 20% and let it run. And we set our stops at about 50 cents on the SPY. So what I mean by that is, let's say we got in our trade exactly at 597 here, and it was a call, so it's going up. Our stop would be 50 cents less, so it'd be 596.50. And then we convert that stop into option pricing, and you'll get to see this today when we do a trade. You'll see how that works. But so I set my stops at about 50 cents unless volatility is really high, and then I might move it to 60 cents or so. So keep all those things in mind. There's if you go to if you go to our webpage, which is linked down in the description, and you purchase, you'll get this page here. We get your TradingView username, so I can give you access to the account. And then if you don't have a TradingView account, you can click here to open a new one, and you will get a discount. So that discount code, you just click this, and you'll go over to TradingView, and you can get a discount on your TradingView account. And then if you scroll down, it'll tell you how to set up the indicator, our day trading strategy. It'll go through identifying trend days, weekly swing trading, all of that kind of stuff. So make sure you check that out. Read all that if you do decide to purchase. We do have great coupons today. I'm giving 30% off your first monthly payment if you want to do that with the code monthly30. And because I've been moving and haven't put out any videos or any content, I am doing a 10% discount on the yearly. I rarely discount the yearly. I keep saying that, and I keep discounting it. It's because I've had some life events going on, like moving, where I haven't been able to put out videos and content. So as a kind of thank you for your patience on that, I am discounting the yearly one more time with a 10% discount on that. So make sure you take advantage. After this week, that will not be there anymore for quite a while. And and that is a really good deal on that because, like I said, I don't discount that. We will be trading live, but there is a delay on the stream. So if you're not in my Discord room where I put the trades live, you will be behind on the trading. But you'll at least see how the trading indicator works and understand how we use it and where our levels are, things like that. If you have questions, please feel free to put them in the chat. I will answer as many as I see. If I see all of them, I'll answer all of them. But sometimes comments get going fast, so keep that in mind as well. Overnight, we're going to be quick here because we got about 5 minutes before the open. Overnight, they did move up to our major call wall at 600. If they get through that, a squeeze will occur to the upside, and they will likely press toward the all-time highs. Right now, our primary count is a more direct move to all-time highs since they broke through all of our resistance levels. That was not our primary count originally. We were looking for a bigger pullback. Secondary would be a bigger pullback, so I'll just highlight that real quick on the ES. It is possible, because SPY did not make this high right here, because this was an after-hours high, that SPY makes a high today and turns down. That is possible, and if they break through this level here at 5,900, and then especially this one at 5,850, that would be an indication that we are going to break down first before making all-time highs. But as of right now, we are looking at this as a 1-2 setup. A small pullback would make sense here, because this can be 1 of 3, 2 of 3, and then you'd look for 3, 4, and 5 on up. And we'd be looking at 6,350 overall to 6,400 as our target. So that's where we are on the ES. On the NASDAQ, same type of deal. We have a 1-2 setup. They could make a high here and turn down for the Qs to make that high as well, since they were behind. If not, we'd look for a small pullback and then rip up into the 22,000 zone, a pullback, and then overall target of about 22,350. I'm sorry, 23,350 would be our overall target. Somewhere in this 23 to 24 range overall would be the natural targets, but 23,358 is the 2.0, and that's where we'd be looking. On the NASDAQ, they need to break below 21,700, I believe it is, or 21,000. Yeah, and then 20,700 to start any kind of significant down move. Morning, Mark. Thanks for joining. Told me the other day the indicator was killing for you. I'm glad to hear that. That's awesome. I have a lot of people who have really changed their lives trading with the indicator because of how powerful it is. And that is always great to hear. That's one of the biggest reasons I do this, is to help traders change the way they trade, make money in the market, and finally succeed doing this. It's very hard to do. And I always love to hear those stories of people who are doing well in the market. As of right now, at the open here in about a minute, we're going to be in a selling trade, but not in a full sell cycle. It's kind of convoluted to explain here with only a minute left, so I'll just say that we're in between a buy and sell. Usually I have a clear indication of what we're looking for at the open. If they spike up, we will be looking for a sell signal. Then they'll need to get a little bit more of a sustained sell to get a buy signal, probably down into this put support level at 596. So normally we are in a full set where I can tell you that we're going to get a buy or sell close to the open. Today, however, we're kind of in between. So we'll have to see what we get here in the next 30 seconds when they do open. I would suspect, given the price action off of the 21 here, we'll get a spike up and they'll look to sell off of this high area. But again, the indicator figures all that out. I don't have to do it. It does it for me. And it makes it really nice because, you know, you miss a lot of things when you're looking at a lot of things. And you say, oh, why did I lose that trade? And then you go back and you say, oh, I see, I missed this or whatever. Well, the indicator calculates all that and gives you the most high probability trades. And goes through that. So we'll see what happens here at the open. If they push up and we see an SS like that, okay, now we're definitely looking for a sell here as long as they maintain this bar to the upside and that sell SS prints. SS is a short stop or sell stop, meaning if you had a sell, you would stop out. Now, that's for traders who are less comfortable setting their own stops. I set my own stops, but I put that in there for traders to understand when to stop out if they don't. Jacob is kind of a cheat code. Oh, thanks, Mark. I think it is personally the Invest with Jacob indicator. I'm really proud of it. I think we've put together something really nice, and as long as you follow the rules and just stay patient, it is a really, really good tool. So over here on the left, you see LS. This is a long stop, or when you stop out on a buy. So you got a buy signal and it stopped out on this pullback. And then SS is a short stop, meaning you stopped out on this sell signal here. You got a new sell signal. So we're in a sell. They're going to have to, you know, push this pretty hard to get through a sell cycle. Like I said, probably down to the pre-market low area, which is down here around 595, or the 596 area. Those are our two major levels to start the day. So this sell here got you in at, and we don't take these, I'm just giving you where we're at. Remember, we don't trade anything in the yellow or blue, only in the white. This got in around 597, and they've pushed it down about $1 so far. So so while it's doing this, because it's going to need to push down a little bit, what happens is when you get a buy signal, it has to complete a buy cycle to get into a sell cycle. So now it's trying to complete a sell cycle down to get you a buy signal. If it doesn't complete, then you just get a stop out and you go back into the buy cycle. So what that means is you're in a buy, it's looking for weakness in this buy cycle to push down on. When it sees that, it's going to give you a sell signal near the top. And if that sell follows through, great. If it doesn't and you fail, then you stay in the buy cycle. The trend is still up. We're still in a buy mode, and we'd be looking for another sell signal somewhere at a new key level. If it doesn't complete the cycle, though, you're not going to get a sell or a buy signal. So there's a lot of times where we open up in a trend, like the gap up, and they do this and give you a quick sell that fails, and then they do this. Well, you're still in the buy cycle. You haven't changed anything about the trend or the move. So you're not going to get a new buy signal. You have to get through an entire sell cycle before that happens. Otherwise, you're going to get really wonky entries, and you're not going to like it very much. Just as an FYI, there is a link in the description to the website if you want to get the indicator. These codes that are on the screen are only good for the live stream. Once the live stream is over, they'll be active for about 30 more minutes while I get everybody set up who bought the indicator, and then they'll go away. So if you do want to try it out, well, we can go over here to we'll go to our screen real quick. You do get a 30-day money-back guarantee, so I want to pull that up real quick and go to membership plans. And then if you scroll down, you'll see my rooms. This is where we do this kind of stuff every day. I don't live stream every day, but I do videos every day, and I give updates all throughout the day in the rooms. You get the daily live calls. If you want to check those out for one day just to see what the room is like, you can do that. But you have the indicators right here. So for normally $59 a month, I'm giving you 30% off of that for the first month, or $5.90 for the year. I'm giving you 10% off of that for the first year. And you do get a 30-day money-back guarantee, so you can get this, put it on your chart, see if it works for you. If it doesn't, no big deal. We'll refund your money before 30 days. We would refund your money. But if you want to get it and put it on your chart and just watch it or paper trade it, you don't even have to risk any money. You can just see how it works and how effective it is. And if it doesn't do what you think it's supposed to do, or you don't like it, then that's no big deal. We will, like I said, we'll refund your money, take away the access, and go our separate ways. And there was no issue there, no risk, no reward, no harm, no foul, So just remember, you can always try it out, and if you don't like it, get your money back. And you don't even have to trade with it. You can just watch it work. So 595 is going to be our first key level. 596, I should say, excuse me. 596 is our first key level. Then 595.31 is our pre-market low. They've already tested the put support level here and bounced, but now they're coming back into it. These are levels from a thing called Mentor Q, or a site called Mentor Q, and it is the highest level of traded price for calls and puts, and then the high volume levels as well. And what that tells us is where the market makers, the people who actually make price in the market, are exposed, and that's their gamma exposure. And if they get below this put wall, they have to cover, meaning they have to hedge against what they've sold. So when you buy an option, there's somebody there to sell you that option. Usually that person is the market maker. They control most of that stuff. So if they sell puts here, and the market continues to go down, that's bad for them. So they want to defend this level very hard. So lots of times we get buys off of these types of levels, or reversals off of these types of levels. Whether we get a buy signal or not is determined by the indicator. And if we get below these levels, they have to cover their exposure. So they have to start buying puts to cover their sold puts, which creates a waterfall effect to the downside. Conversely, same thing with call resistance. They sell you the calls. If the market keeps going up, well, they have to start buying calls to cover the sold calls that they have, and then momentum kicks in and you get a squeeze to the upside. So these levels are really important for trading because they get defended strongly. And if they break through those levels, a lot of times you get follow through that's very strong. Where can I get Mentor Q for TradingView? So you go to their website and you sign up. I don't have a code for them. They don't do referral programs. So I don't have anything to give you a discount. You have to sign up over there at mentorq.com. And I think it's MENTHORQ. And then when you do that, you can add their indicators to your chart. They give you instructions on how to do that. And they also show you the levels on their site. It's a really, really powerful site. It's really good. But these are just these are always going to be key levels on the chart because for day trading especially. But they're just some day trading levels. You can get reversals from anywhere on the chart, but these are great places to watch for them. This isn't a bad sign for the bears if they can push through this put support. I haven't even looked what's option pricing look like today. So one thing you can also do is look at option prices. If option prices are around $1 or so, $1.50, that tells you the market's not looking for a lot of high volatility. They're $1.80 today and $1. So they're looking for a little bit of movement, about 40 points of movement today. And that can be in one direction. It can be 40 points straight up or straight down, or it can be, they go down 20 and back up to flat and close the market flat, those types of things. But they are looking for a little bit more volatility than normal today, which is a good sign for the bears. More volatility usually equals bears. They're coming down. Okay, so key level, pre-market low, and they're pushing hard. Let's look at let's see if they hold here. We do have some mixed signals on the internals. ADD is positive 381. Most of the VOLD is slightly negative. And that means that you really want to see that if it's going to be a bear market, you want to see it all negative, and ADD careening to the downside, which it kind of is right now. It started at positive 800. It's at positive 375. And you want to see the VOLD really start picking up and be like negative 3 to 1. So for every dollar coming in, or every dollar coming in, 3 parts of that dollar is negative and 1 part is positive, meaning they're selling more than buying, obviously. But they're at the pre-market low, so this is a point where you see buyers usually step in. So we will be looking for a call. We'll see how that plays out exactly. So we don't want them to go too hard here. They just entered the sell cycle. As long as they can close this bar without, just absolutely ripping it back to the upside, they need to close a bar in the sell cycle. And if they rip it too hard back to the upside, they're not going to do that. It's not going to fully get there. So hopefully they can reject here so we can get a buy signal off the pre-market low, which is what we're looking for. Or just below it here at 595 would also be a good level. We do trade on the 5-minute chart. So when we're day trading, the 5-minute chart is what we use to it's what we use to find our entries. And when we're swing trading, we use the weekly chart. We got a couple minutes before this bar closes. And on the weekly chart, they have really good entries for swing trades. So if you go all the way back down here a few weeks ago, keep going. We got this buy signal all the way down here at 540. We're almost up to 600 now, and that buy signal was on this bar so on April 21st, you got a buy signal on the weekly. If you took that buy signal, they ran it all the way up to 600 here. So it's a 60-point move up, a 10% move up in a few weeks. So the entries are really good on the weekly for the swing trades. And of course, nothing is perfect. Nothing's going to be exactly right. But you get a lot of those types of entries where price moves, 5, 10, 15, 20, 25% all in one trade. And on weeklies, you want to set your target out months, usually like 3 months at a minimum, because it's looking for really long bull runs or bear runs, either one, depending on whether it's a buy or a sell. So our supporting evidence right now, what we do is we say, okay, market's moving down. Does the market Do other markets support that? So the NQ is green, so it's not as weak. It's looking for, it's holding up, I should say. RTY is leading to the downside, but that's not uncommon. The Dow Jones transports are down a little bit. They're in the red. The banks are in the red, but SMH is green by 0.5%. If we look at the Mag 7, you can see NVIDIA is red, but the rest of them, let's see, green, 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 green. So 6 out of 7 are green. And then Tesla's red. So we are seeing some buying pressure from the bigger stocks, which tells us we have a breadth issue, meaning the Mag 7 is holding the market right now. I can see that we are, we started at the ADD, which is the advanced decline on stocks, meaning it tells you how many stocks are trading above yesterday's close. So it was 800 stocks were trading above yesterday's close. Well, that's not exactly true. The delta of how many stocks. So let's say you have 1,000 stocks. If 600 are trading above yesterday's close and 400 are trading below, the ADD would be at 200 because it's 600 minus 400. So it was at 800 delta, and now it's at 300. So that's come down to 500 stocks, or however you want to say that. So that is a big drop, telling you that there is some weakness right now. But again, we are trading off a key level here. And we have several key levels. So there's a lot of support right here. You had the put support that they got through. Let's bring that so we can see it again. So they're back at the put support, but what you had is this put support that they got through, and then you have 2 high volume levels here at 595 and 594. So it does have a lot of support to get through before it can really break down. So we'll see how that goes. Okay, now we are officially looking for a buy signal today. Now here is so they're coming into the pre-market low. If they break the pre-market low, and then they bounce and hold the 21 and VWAP, which is way up here now, and then come back down and break this low, that would be a trend day to the downside. And so then we would avoid buy signals at that point. Right now we don't have that. They're basically at the pre-market low. Now they have broken down below the pre-market low, and they're doing it with force. They just moved right through this high volume level like it wasn't there. And so now that they're below put support and this high volume level, you can see the market makers. This is why you get fast moves like this. The market makers are piling on because they need to cover. And so usually what happens is they'll cover down into the next high volume area and see what happens there. If we scroll down here, our next put support is all the way down at 590. So your main put support is going to be 595. Then the next one, meaning, so let's say they rank it by volume of options. So let's say your volume on this bar was like this, and then they come down here and the volume was on this bar is a little bit less, but it's still high volume. So you can see that there's big volume here and the next big volume here, and then after that you have some high volume levels that are a little bit less as well. So it just tells you where they're looking to try to hold the market, and especially where the major put support or call resistance is. So the market pushing through this high volume level on one bar without even testing it is I mean, they can bounce it back up above it. We'll see how it goes, but that's pretty impressive. That tells you that there's at least a fair amount of selling going on here, a fair amount of volume. The ADD still crashing. It's down to 115 now. The Volt is about to turn negative overall, and all the major indexes are negative on the Volt except the NISI. They're trying to turn SMH red. Now we've turned everything red up here. Did the Mag 7 turn red? Some of them. Meta's turned red. Apple's turned red. So you're starting to see the market turn over a little bit here. So we could have a trend day down. Now that stinks because we don't have many trades if that's the case, or any. We'll always try the first one as a reversal because they can reverse, and those can be very powerful where they come down into a level very strongly and do this, If you haven't watched my most recent podcast episode, we talk about that exactly and how it's very scary to trade when the market's moving hard in one direction. It's very scary to trade against that. But those are often the best trades. And your psychology has to change to embracing that and saying, yes, I can't wait to get a buy signal, assuming we have the right setups and stuff, versus, oh no, I couldn't possibly trade off that level. It's coming down into it too fast. Is there a price level down that you would look for a long swing? Yes. So I talked about earlier, it would make sense for a 1-2 setup here. So if we go over to the ES, delete, we look at this real quick. So 59.36, 59.15, especially 59.15 off of this level right here. That would be a great 1-2, 1-2. So you have 1, 2, 1 of 3, 2 of 3, and then 3 of 3 is the breakout that you're looking for. So that setup's really strong. So anywhere in this 59, 30, 15 area that you get a bounce, I would trade with this, being my stop being below this level here. Yes, I would be looking for that. But they got to get through a lot of support first. Yeah, support. All right, we are looking for a call. Let's see. Our current strike would be 596 if we do get a call, just so you guys are aware of that. And so I already have all that queued up in my trading platform. I don't wait until I get a buy signal to go, okay, I need 596, and then I need this price, and then I need whatever. I already have it ready. All I got to do is hit buy. I have my limit set. So right now the price of that option is 150 basically, give or take. It's moving around. So I have my limit set to about 160 right now, meaning that if I hit buy, I can buy it all the way up to 160 as a price. But if it's at 153, it'll still give me 153. That's how I can get in so fast and not use market orders, because market orders will kill you. But if you're not ready and you see the buy signal, by the time you get your trade set up, price could have moved 20, 30 cents. It's done it a lot. And then you miss the trade, essentially. That's too much of a trade to miss. So you have to be ready and on point when you're trading. And so I always have my trade up and ready. I right now have a call trade up, and I adjust my strike price as needed. I adjust my limit price as needed, so that at any given time, if I see a buy signal, we can jump in really quickly. Now, this is looking like a potential trend day. They haven't tested the 21 fully yet. However, what you do have is you have a move into the pre-market low, you have a bounce, you have a break of that low, you have a back test of yesterday's low / pre-market low, and if they come down and break down again, that would be very indicative of how trend days go. So then I'd be looking to really only trade. We haven't had a trade yet, and I will always take the first trade of the day, because, again, you can get fake outs where they fail a breakdown and then rip it back up really strongly. But I really want to take it off of a major level. So 594, this high volume level here, would be a great place to look for a buy. If they fail there, though, there's not much support all the way down to 590, 591, 590 to 590.50. There's support down here, but they should not. If they break through this high volume level here, this can waterfall very quickly down into the 590 area. So we'll keep an eye on that. And this is part of the psychology of trading right here, right? Unfortunately, you got a sell signal right here, right? It's in the pre-market. I'm going to make this full screen. You got a sell signal right there. And that sell signal was spot on, right? Worked out well. They tried to get it here. They got a little bit of a bounce. I don't think you would have stopped out on this one if you traded properly. You would have still been on this sell right here. And then they collapsed the market, all the way down to 594 off of this 597 area. So really nice trade. But it happened in the pre-market, so we don't take it no matter what. And if you miss a move like this one, that's okay. There's going to be another trade. There's going to be another day. There's going to be another move. You don't have to get every trade. You don't have to get every move. You don't have to get everything right. You just simply say, okay, that one stinks, but we'll move on to the next one. We'll wait for them to give us the same move back up or a different setup or a different day. Sometimes it's just not a good day to trade, and you just sit out that day. So psychology is the number one factor in trading. I say all the time, a person with a great psychological mindset and who can control their emotions, but who is a poor trader, will control their account and make more money or even lose less money than a great trader who cannot control their emotions. You must understand that you're going to miss trades, you're going to lose trades, you're going to make mistakes, and that you must be able to learn from the mistakes, be okay with missing a trade, be okay with losing, because in essence, one trade is totally irrelevant to anything in the world. It's about a culmination of hundreds and hundreds and hundreds and hundreds and hundreds of trades. It's the law of large numbers. Probabilities only play out over time. For instance, if you flip a coin, the proposition for that is 50-50. But you know as well as I do that every time you flip a coin, it doesn't go heads, then tails, heads, then tails. But over 1 million flips, it'll be probably roughly 50-50. Because it's the law of large numbers. That average plays out where you get maybe a run of 10 heads in a row, then maybe a week later you get a run of 10 tails in a row or 20 tails or whatever. It happens all the time. I lived in Vegas. I've seen roulette wheels come up black, 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 even though that's a 50-50 deal. Well, roughly 48-48 because of the greens, but so, or 40, whatever it is. The point being, that stuff plays out over time. So if your edge is 6.5 out of 10, you want after 1,000 trades to have, maybe 600 and 400 because you don't get the exact numbers. But over 1 million trades, it'll be 6.5 out of 10. So you have to be able to withstand the losing streaks because they will come and they will happen. Okay, this is starting to look like a trend. And you have to be able to control yourself when emotions get high. You have to control yourself when you're happy so you don't put extra money down and say, oh, I can't lose. You have to control yourself when you miss a trade, that you don't chase fear of missing out. You have to control yourself when you lose a trade so you don't revenge trade and say, well, it's definitely going up now. And you have to control your boredom so you don't just trade for no reason because you just want some action. All of that is very, very hard and presses on you all the time when you're trading. When you're just sitting here staring at a screen doing nothing, you start to get bored and you're like, well, I don't know, it could go up from here. Maybe I'll just get in a buy here. And then you get drilled because it's a trend day. So make sure you understand that trading is a mindset first and a system second. That's why my psychological podcast, The Subconscious Traders, is out, because I see these really talented traders who know the levels but can't trade lose money. And if they can get their mindset correct, and everybody goes through this. I mean, when you first start trading, if you aren't emotional about it when you first start out, then you're either a robot or you just don't understand what you're doing or the consequences of your actions, one or the other, so much that it doesn't affect you. So just make sure that you do those things and you'll be a successful trader. It's a really easy concept to understand. It's really hard to put into practice. All right, they're pushing through this high volume level pretty quickly. I mean, they should bounce here in most cases. But again, that's probability trading. In most cases, you'll get a bounce here. If they go directly through it, well, that's the other side of the probability, right? Are you trading SPY today? I trade SPY every day. I am not a futures trader just because. That's literally the reason. Just because. I I didn't even learn about futures until, I don't know, maybe 10, 15 years ago or something. And I'd already been trading SPY for like 10 years at that time. And I was just very comfortable in trading the SPY, and I didn't want to try to learn a new vehicle. And so I just never did. I understand that there are many benefits to trading the futures. For me, it just was easier and more comfortable to do what I was doing. I'm a creature of habit, and I didn't want to step into a whole new arena and have to learn that and balance all that stuff. So I just trade the SPY. Now, I do believe, let me look at the SPY on a different chart here without after hours on. When did we hit 6,000 on ES? May 29th. Okay. So May 29th. Okay, yeah, so they did make a new high on the SPY. So it is possible, we were looking for the ES to hit 6,010 and turn down sharply, which it did almost to the dollar. It hit 6,008 and turned down from over here straight down. Or no, it was here. It was this one. And they came all the way down to wherever on the ES and then came back up here. So it could be possible that because SPY opened here and never got this new high, that they needed to make this high and turn down, and that could result in the turn down. We have adjusted our primary path to all-time highs because of the resistance is broken. However, this is still in line with that path on ES that hit on the 29th of May. So we would keep an eye on that and how this plays out off of this high. If they hold and start back up, that would be the 1-2-1-2 setup and a breakout. And if they fail back below this level here at 583.41, that would be ugly for, or starting to turn ugly for the bulls in the short term. Remember, that's the short term though. Okay, let's see if we get a buy here. We're off this high volume level. I said we should get a bounce off of it. Most of the time they're bouncing. Now let's see if they can follow through on that bounce. Can we find HVLs on TradingView? Yeah, so that's called Mentor Q. It's a website. If you go to Mentor, it's here, I'll show it. MENTHORQ. If you go to that.com, mentorq.com, you sign up for their service. I don't have a referral link, unfortunately. They don't do that, so I don't have a discount code for you. But if you sign up for their stuff, you get these high volume levels, call resistance. They're really, really powerful. And they keep my trading chart really clean. The only thing I really keep on is volume, Mentor Q, and my indicator, and then the 21 in VWAP right here, because they're great levels for reversal and rejection. So if they're above it, they often do this. And if they're below it, they often do this. So those are good profit-taking levels. So let's say we got a buy here, or maybe down a little lower. And, we took our 20% here, and then they're kind of doing this. And then they come up into the 21 in VWAP here. That's a great place to take additional profit because they very often reject that area, especially on the first time back to it. And if they fully reject it, then you took profit basically at the high of the trade. And if they reject it and go back, you still have runners to allow you to capture as much as you can of that. Don't forget, guys, the coupon codes you see on the screen are only good during the live stream and about 30 minutes after, while I get everybody who bought the indicator set up. Slow day today as far as trades go, because it does look like we're going to start a trend day down. We haven't gotten full confirmation, but I would not be super excited about a long trade unless it does come off this HVL, which right here, this blue line. If they hold here and give us a long, then I would be okay with taking that. But if they come down here and try to give us a long kind of off of a random level, those are ones that tend to eat you up. And so I would not be looking to take anything now unless it's off of a key level. We did hit the 7 o'clock Pacific here, 10 o'clock Eastern. I guess there was not news. I honestly didn't look at the calendar. I was very busy this morning. I don't know. I guess there was nothing major anyway, because price isn't jumping around. So let's see let me pull up the economic calendar over here and see what we got. Today is Thursday. We have the jobs numbers. No, we don't have anything. There's a Fed speaker at noon Eastern, and then the employment report tomorrow. Okay. So nothing at 7 today. So I mentioned there was a little more volatility in options pricing today, which favors the bears, and they have broken through some key levels, so keep that in mind too. When option prices are higher than you would expect, that usually means more volatility. So it doesn't mean necessarily a full-on breakdown, but it can mean some levels will break and you'll get a little bit more of a down move than normal. They won't just come down, hold, and go back up. We didn't see huge volatility in pricing, but a little bit different. So you can always look at that as a kind of clue as to what kind of day you're going to get. One tip. So when you get a strong down move, if you're using the indicator, you get a strong down move like this. This is like a 3-point down move, pretty straight down. It takes a minute for the market to kind of balance itself out, at least in the eyes of the indicator, to get the buy signal. And so if it takes a minute and we get up near this area, they're going to pull back off of this the first time through 85-90% of the time. Maybe not far, but if you enter right, if the buy signal enters right on VWAP and the 21, very often you're going to get a small rejection where you can get a better price for that entry, and then they'll come back up and possibly break through, depending on if the trade works out. But if you try to enter right on VWAP in the 21, you're likely to get smacked right away, because it's going to very often reject that zone first time. Now, if they had done this, come back up here, then down, then back up, then I'd still enter, right? Because they've already tested it once, and now they're coming back to it. But the first time into it, you're very likely to get at least a small pullback where you can get a better price and then look for the upside. You don't have to do that, but it will probably save you some stop outs and get you a little better entry on your trade. The risk of waiting is that they don't stop and they just have a really strong move, and that does happen sometimes. But way more often than not, they're going to reject that first time through. Can you trade the Dow Jones with this indicator? Yes, you can trade anything you want. The difference is, so when you look at, I didn't go through setup, we were a little strapped for time. The When you set up the indicator, it'll go through all this. It's automatically set to the settings it's on right now because it's meant to trade the SPY. That's what it was built for originally. But if you go to the inputs, it's watching the futures markets while you're watching the SPY. And it looks for all three markets to be in sync before it issues a buy or sell, so that if for some reason the NASDAQ's struggling and the ES is doing good, you're not trying to trade against that because you're going to get a lot of chop most of the time. It wants all three markets to see broad buying or broad selling and momentum on all three markets. So it's looking at a lot of factors. If you're trading something that isn't in this triad of the SPY, the ES, and the NQ, and all you do is, if you want to trade futures, let's say you want to trade ES futures, just change this to the SPY and have your chart be on ES. And if you want to trade NASDAQ futures, trade this to the SPY and have your chart, on NASDAQ. But if you want to trade the Dow or Apple or anything else, your chart needs to be on that. So your chart would be on the Dow, and then you'd come in here and you could for the Dow, since it does have an alternate, the DIA or whatever, you can do the DIA. And put that ETF in, and then put the other one on the Dow as well. So you would click this one here, and then you could put this one on the Dow like that, and then your chart would be on the Dow, and that way you would get confluence. But if you were on, say, Apple, your chart would be on Apple, and you would want both of these to say Apple as well. So yes, you can trade anything with it. You just have to update your settings. The easiest way to do this is if you don't want to have to change these settings on different charts. What I would do is I would go to create new layout, and then make each layout its own thing. So make a chart for Apple, and then down here it will say Apple. And then you just switch charts down here. And that way you're automatically configured for those stocks. You don't have to change the settings all the time. You just have to change your chart over. Or you can have multiple charts. So if you have like the Mag 7 is what you want to trade, and you do that, then you can come up and hit this square here, and you can put, however many charts you want to put on the screen at one time. So if you want like 6 charts here, you can have them on there, and then you would be able to look at them all at once, and they'd all be configured correctly. Oh, I think I need to change this back, huh? Yeah. Better get this right because we could get a buy signal here. As I said earlier, May was not a great month for us, and we don't hide behind that because we have mostly great months. Our probabilities are very high. We're going to have winning months. I'm going to paste it in here. Matt is one of my users. He keeps track of all of my trades. He does not work for me. He pays to be in my room. He just tracks them because he wants it for his own benefit. So we were 90 cents down on May, which times 25 contracts is negative 2250. Profit year to date is 29,725. Day trading rules protected capital this month that displayed a pattern of big moves overnight and chopped during trading hours. It definitely did. So this is when I try to be as real with you as possible and say our indicator is amazing, but it's not perfect, and nothing is. We're going to have some bad times. May was very weird. There were lots of huge gap ups and gap downs, and then during the day, you never got any follow through or movement. It just did this, and those are really hard days to trade. And so that cost us a little bit of money. The market goes through weird cycles like that, just like anything else. It's going to go through its moments of, holy cow, this was incredible. And it's going to go through its moments of, what the hell is going on? And if you stay the course and you... Can you guys still hear me and see my screen? I got an error message here. Thank you. Okay. So if you stay the course and you follow the rules, yeah, you're going to have some bad times, but they're not going to be horrible. They're just going to be a little bit of, they're just going to be a little bit of down. You know, we're trading based on a $100,000 account, so we're down 2% in May, but we're up 29.7% on the year, right? So I think we're in good shape, up 30% when the market definitely is not up 30%. So keep those things in mind, that it's a process, and it is something that if you follow the rules, you will do well. Again, those discount codes only last for the stream. So if you are interested in trying it out, you get a 30-day money-back guarantee. And you can take advantage of a really great price right now. And the yearly, again, I know I say this every stream. I don't want it to sound like I'm just making stuff up to get you to move. I actually am in the process of moving right now, and because I haven't had any videos out lately, I gave a 10% yearly discount again this week, because just to kind of give back to the community of anyone who wanted to try this out, since they haven't had any content for a week. So I appreciate patience with that, and as a, you know, I don't know if it's a gift or whatever, but as a thank you, that's the word I'm looking for. I'm discounting the yearly one more time, so make sure you take advantage of that if you're interested. It is a much better deal. You get, basically, you're getting 3 months for free of the year, so you're only paying for 9 months, and you get a 30-day money-back guarantee, assuming you've never used the indicator. So if you're on the monthly plan and you've been on the monthly plan for 4 months and you switch to the yearly, obviously the 30-day money-back guarantee does not apply. But if you're a new user that's never used it, you get the 30-day money-back guarantee. So right now we're getting consolidation between the two high volume levels. Let me move this over so we can see those. So we got two high volume levels. They bounced this one back into this one, and now they're consolidating. And we'll see who wins out here. Do you trade SPY or SPY options? SPY options. Now, you can trade the SPY. A lot of people, what they do instead of actually trading the SPY is they trade the 3X funds, so SPXL and SPXU. Because you get, you know, if the market moves 1%, you get 3%. Conversely, if the market moves 1% against you, you're going to lose 3%. So it's a way of trading without trading options and getting some leverage. So that is a possibility you can use, but I trade SPY options. Otis Page says it's a great indicator. Thank you, Otis. I appreciate that. I like it. I think it works really well. If you understand the purpose of indicators in the system and use it properly, I think it's a game changer. But I'm biased because I helped build it. I worked with a very talented day trader on it. I was not a day trader before this. I was a swing trader, and the day trader I worked with convinced me that day trading is worth it. And so we worked together because I had the technical side and he had the trading side, and we put it together. And yeah, here's what we have. So it's I think it's a really strong indicator. It takes into account a lot of different things that I would not have thought applied to day trading, but do. And that is those are the things that really kind of separate it from other indicators. So, if you don't know already, many of the people in my room do know this. The reason you have the 21 on here, you can use the 20 as well. It's an exponential moving average, the blue line. This price will never get too far away from it. It will always come back and test it and then either continue or break through either way, but it will always come back to it. And it'll never just run away forever. And there's two ways it can come back to the 21. So the first way is it goes down or up, it goes away from it and it just comes right back to it. The second way is what it's kind of doing for the moment anyway, which is it goes on its move and then it does this sideways in time and allows the 21 to catch up by moving down to it. So the 21 can move down to price or price can move up to the 21, but it's always going to come back. You'll see that even on trend days, you're never going to get too far away from that 21 area. If we move over just a little here, Tuesday was a trend day, up, really strong up day, and it always came back, kept it close. The 21 was always within reach, and then at the end of the day, it came back and touched it. But you'll never see the 21 get too far away from price, or 20, whichever one you use. I use the 21. It's just how I was taught. There's not much of a difference, honestly. But the 21 is just what I've always, 3 weeks is what I've always been, well, that's on the daily chart, but 21 increment. All right, there's our first buy signal. Okay, we're in at 595 at 179. And our stop is going to be 594.70. Let's see if the bulls can start making something happen here. So if you're new to the indicator, as the conditions are being met, the buy signal will come onto the screen. And if the conditions change, it could go away. You still take the trade. Those losses, if it loses, are still factored in. Everything is fine. But that's part of it. As soon as the buy signal appears, you take it. Now, we did get in at 179, so that's basically 18 cents, 36 cents, which is going to be 5. So 215 would be our first take. We are coming into the 21, so I would expect a little bit of a pullback off of this level. They need to push through it just a little bit. We're at 207 right now. So this will be a key part of today. If they're going to fail, this is likely the spot that they are going to fail is at the 21. So we'll see if they are able. They back tested. Remember, we said they break down below the pre-market low, back test the 21. So they've done that now. If they continue down to the back to the downside here, then it's likely a trend day against us, or to the downside, I should say. And if they break back down and break this low, so they got to break 593.91, but now they've back tested the 21. If they turn back down and break this low, then that is very likely going to trend to the downside the rest of the day, or at least the rest of the morning. Okay, we're going to close half for 215. We're going to set our stops to 180. And that's a winning trade right there off that reversal. That's how you do it. Market consolidated off of a high volume level. The indicator ignored all of this consolidation and was ready when we broke out. Gave us a winner. Now we have potential here to run back up and test the highs. So we're back testing VWAP in the 21. If they can stay positive through this, then we can run back up to the pre-market high, which they did not test at all. And then if they reject here and come back down, then it's a trend day down. Non-zero says the audio cuts in and out. I don't think that's the case. Maybe it is just on your side, but if that is the case, somebody else could confirm that. I do, when I'm typing on another screen, turn my head, so you might hear me kind of get faint for a minute while I'm putting in the entries. But for the most part, it shouldn't be cutting in and out. Give me 1 second, guys. I'll be right back. All right, I am back. So right now we're trying to push through the 21 and VWAP. We'll see if they're able to get that done here or they're going to reject. So we never let a winning trade go bad. Our stops are at 180 right now. That's a penny above where we bought in. And if they come back to that and stop us out, then so be it. We still make money. But we would never sit there and say, oh, no, they were going to go back up. They'll hold the low and then go back up. They might, but you might take a winning trade and turn it into a 40, 50 cent loser, 60 cent loser really quick because you get in your head and then you get emotional and then you're mad that you didn't stop out when you were supposed to. So never let a winning trade go bad. If you hit the first number and you stop out, then you have a winning trade. Could it go up after that? Of course. And that's where they play with your emotions. I'm not sure why, Otis. You should maybe refresh your screen or check your settings. I don't know the exact reason for that. I still have a NASDAQ long. I'm waiting for all-time high for profit. That seems likely these days, so it's not bad. Good job. So now that we have, so our first stop was set by the SPY price itself, the price of the actual ETF. It was set at 594.70. The second stop, now that we have at 180, that's getting ready to move up to 190, is the options price. So I keep a 50-cent trail on my options, which might be a lot for some people, but so it's not always 50 cents. It'll start, like I just said, never let a good trade go bad. So we hit 215 and I set my stop to 180, so that was like 35 cents. Then I let it move up to 50 cents, and then from there, as price moves up, the stop moves up. 50 cents gives you a lot of chances to catch things like this and not get stopped out. And some people are a little less aggressive with their stops. Maybe they only have a 30-cent trailing stop. That's all up to you. I would encourage you to have at least 30 cents, just because, the market moves in one bar. You can give back 30 cents pretty easily, and you miss a lot of moves because of that. So you got to give yourself a chance to catch the runners by giving yourself a trailing stop that's realistic. Now, I haven't moved my stop to 190 yet. They came up just short of where I wanted them to get to. So we'll see if they are able to hold or if they reject here and turn down. Now, just so you're aware, I talked about this at the beginning. You got a buy signal. You got a winning trade, right? But this is not a complete buy cycle. They did not yet. I mean, they can still get one. But as of right now, if they turn down, you're not going to get a sell signal here because this was not enough buying and movement to offset the initial selling pressure. So what the indicator looks for, again, it has a sell signal, right? And then it looks for weakness in the move down. When it sees weakness, it issues a buy signal. Now we're still in a sell cycle. So as it moves up, it will eventually move into a buy cycle. It has not done that yet. It has only weakened more in the sell cycle. If it turns back down here, you will stop out of this buy and get no sell signal. So you're not always going to get a sell signal or a buy signal in these kind of moves because it doesn't complete the cycle. Okay, we might stop out here. We're pretty close. Let's see how we do. Okay, we stopped out there at 180. So we stole a trade there, right? There was a small move up. We were able to get in and steal it. Stopped for 180. And let's see, that's going to make our average exit. That was 35 cents. That's 17. So 197 was our average exit. Now, that was a 18-cent win on that trade. And you might say, all of that for 18 cents? Well, I trade 25 contracts a day. 1 second here. Or a trade, not a day. Sorry. 25 contracts a trade. Let me get this all updated and then I'll say what I'm going to say. Where's my calculator? Weird. So I don't think you're able to see the calculator on the screen because that's the way the streaming software works. But if you made 18 cents every single day on average that you day traded, and I trade 25 contracts, so that's times 2,500, because that's how many shares you're effectively controlling. That's $450 a day times about 245 trading days on the year is $110,000 a year off of 18 cents a day. So it doesn't seem like a lot when you only make 18 cents, but that little tiny move right there is $100K a year. That little spike up that we stole a trade off of, if you did that every single day on average, that's $100K a year on 25 contracts. So when people are like, why are you trading for pennies? Well, they don't understand the multiplier of options and how that works exactly. So I'm not trading for pennies. I'm trading for lots and lots of dollars. Now again, if they come down, they backtested VWAP in the 21. So far they failed. If they come down and break this low, that is the start of a trend day down. Well, that is kind of the confirmation of the trend day down. We already kind of knew they were in a trend. But again, where did we take the trade off of? We took it off of the high volume level because they already gave us. So this is a little bit just of trading 101. They broke the pre-market low. They came back up and tested it. Failed it to a new low. Then they came back up and tested VWAP in the 21. And now if they fail back down, that's going to really confirm the trend. Now they came back into the high volume level and we traded off of the high volume level. That's how you want to do this. You want to trade off of high volume levels that are likely to provide bounces or rejections. And you want to identify trends so you don't get trapped if they try to bounce it again later. Because under this second high volume level, the reason they're defending it so hard, there's nothing for 4 more points down. So they can waterfall this pretty quickly if they get through. So everybody who's buying here, if they convert them by squeezing them out, that will waterfall really hard into this area. The market makers don't want that to happen. So this is going to be defended hard. And this is one of those cases where I just said, can they do this and you don't get the big part of the move? Of course they can. And they might. Looks like they're going to try to do that. But we don't chase, we don't revenge trade, we don't get angry, we don't FOMO, we just trade what we get and move on to the next day. And because when you do, let's say you go, oh my God, this is going to go back up. And then it does. Was that a good trade? I mean, was it a good trade to say this is going to go back up and trade long and then it does and you win money? Was that a good trade? The answer to that is no. And the reason is because more likely the scenario that they're going to fail and come back down and continue to the downside. Now, more likely doesn't mean guaranteed. And if they go back up, the less likely path played out and you happen to get lucky that time. So all you've done is make a bad decision that got lucky and then reinforce bad habits in your brain so that next time this happens, you do it again, except the next time it happens, you do it and it does this, and somehow you're sitting with a losing day instead of a winning day. Right? Just because a trade goes your way does not make it a good trade. And just because a trade goes against you doesn't mean it's a bad trade. Number of contracts is based on account size, but wondering with a huge account, what's the realistic max number of contracts you could sell and get your price quickly? I mean, you can sell pretty many. That these guys are out there trading millions and millions and millions of dollars. And when the big block trades come through, the dark pool trades and stuff come through, they are buying blocks of trades. So they're not just dumping all of their shares at 598 or buying all of their shares. They're buying a block. So they'll do like this, and they'll say anything in this zone I want to buy. But or sell, let's say they're selling. They start selling at 598. They're going to sell. When price gets below here, they stop selling. And then when price comes back up into this zone, they start selling again, push price down, and then they continue to get these prices. But those guys are trading thousands and thousands and thousands of contracts. They're not trading, 100, 200, 300, 400 contracts. That's on the SPY in particular, that's nothing. That's a blip. You would have to get pretty largely sized to make any difference at all on the price. So being lucky is not as good as being smart. That's correct. Because luck wears off. Luck is arbitrary, and you have good and bad luck. And you're still going to have good and bad luck when you are smart, but it's really gives you a much bigger edge when your luck is good, and it gives you a much tighter loss when your luck is bad if you're using smart concepts. So fairly slow day for trading so far. Price has moved, but we got the one trade which was a winner. That's how it goes sometimes. Some days you'll have one trade. Some days you'll have, like yesterday, we had 5 trades and we won 4 and lost 1. Now, see, this is a place where emotions take over because it's really annoying to have the perfect entry, a really good entry here, and then they come all the way back down, test this level, and then they squeeze it back higher like that. But that's just, you have to be able to say that's how trading goes. There's no perfect trading, and you're going to miss trades sometimes, or you're going to get part of the trade where you didn't get the whole thing, the big move after, because they stopped you out. They ran a stop run. So all they did was they got people in long, and by they I mean the market makers, and this is how they squeeze people. They got people in long, then they got shorts to want to come back in because they said, oh, we're going to go back down and break this low, and this is going to be a breakdown. And then they trapped all of those shorts and squeezed them immediately. Why didn't your indicator signal a long stop? Because the criteria was not met. So my stop was met, but the indicator can have different criteria. So there are times where it's too sensitive and it stops out too fast, and there are times that it's not as sensitive, just depending on what's happening. The most likely scenario is this selling was super weak. In other words, the bulls pulled back to allow them to sell it down. It wasn't super high volume. And then the volume came back into the upside, so it never really got enough negative feedback to say this is a bad trade. So the bigger the price moves, the bigger the stops will allow themselves and at times in the indicator because of just how the factors work out. It takes longer for the factors to get, what's the word I'm looking for, switched or reversed. So like over here, you're looking at really small price moves, right? So you get a buy and then a really tight long stop, and then you get, a sell and a really tight sell stop, and then you get a big price move, so your stop is bigger, and you didn't even go negative here to the overall low, so it did not view this as weak. It probably would have after, and if you look, you can look at the volume down here at the bottom and see exactly what happened. So they took price up so they had low volume was dissipating, got some weakness. Volume slightly ticked up here, so they could push price a little bit. Then they let volume fall. They let the sellers do the selling, and then they cranked volume and just absolutely destroyed the sellers. I mean, this is a ton of there. I'm guessing there was a tweet or something, some kind of catalyst here, because this is both of these are bigger than the opening bar, and that's not normal unless there's some kind of news event to drive that. So maybe somebody tweeted something, and by somebody I mean Trump. So you won't get another entry until it stops the long. That is correct. Yeah, there's no reason for it to give you another entry because it says I'm still long here. So why would I give you another long? You know what I mean? Had you got a sell stop down here and it held, then it would have given you another long. But if it never stops itself out, there's no reason to issue another long because it still says I'm already long. Why would I say I need to be long again? So they rejected the breakdown bar. So this is price action 101 stuff. They came back to the call resistance zone, but where they really rejected was right here. So you had this consolidation area, and then the breakdown bar is right here where they break these lows and follow through. And they came right back to that area and rejected it for a short term, back to where? The 21 in VWAP. And now you could be looking potentially at a squeeze higher. They never tested the pre-market high. If you got a failed breakdown here, a squeeze higher into 600 would be the next major resistance zone. So getting back through the pre-market, or I'm sorry, they're overlapping. I think it's the weekly high right here, the printed weekly high at 597.95. Getting back through that will push them up into 598, but ultimately this 599, 600 zone. Hey, Jacob, you mentioned earlier that market makers wouldn't want that waterfall and price drop. Why is that so? They also don't want squeezes. So if you think of market makers as a bookie, if you know anything about sports betting, bookies don't care who wins the game. They want the juice. So when you bet a sports event, you have to bet $11. In most cases, there can be different odds. But if you're betting just a standard football game with a standard line, you have to bet $11 to win 10. Meaning the bookies are taking a buck there. So they want the action to be balanced on both sides. So if they have $1 million on the win and $1 million on one team, $1 million on one team and $1 million on the other team, all they're doing is collecting their 10%. And then they pay whatever side with. So the winning team, right? They take the losing team's $1 million and pay them. But both sides had to pay $11, so the winning team would get their $11 back plus $10 from the losing team's side. So the bookies would keep the losing team's extra dollar, which is about $100,000. So the bookie wants even money on both sides. The market makers want the same. Well, if there is a ton of options at a level, for instance, these call levels or these put levels, those are the highest volume of options traded. That puts them off balance because they have to start paying those, because the market makers are the ones selling you the bet. Just like the bookies are selling you the bet, the market makers are selling you the options. So when you say, when everybody stacks calls on, say, 597 here, and they start to go up, you can see they've rejected it twice now. And they got below it as soon as they could over here. When you see that, all of these options that are stacked here, they all start to be in the money, right? That means that they're going to get paid. So now the guys who sold the options are losing money because the market is overwhelmingly positive. So they have to start buying options to cover and hedge. So all they're doing is hedging to balance their book. Well, that means they're buying options though, right? So the buying of options creates that squeeze. Then they have to continue to buy, and it's kind of this never-ending effect until they can find a level that it evens out. So it's a lot of exposure for them to have to do that, and it's a lot of extra maintenance and costs. So they don't necessarily want those things. They want to keep price in between the high-level puts and the high-level calls to screw as many people as possible and keep their books balanced. Does that make sense? I know that's kind of a long story for a short answer, but they need to balance their books, or they will get taken, and they can't do that. There seems to be a mismatch between the SPY and the Qs. Who do you think will play catch up? I haven't looked at the Qs. Let's see what they're at. So ES would have to play catch up, and the Qs, right? So we're in the everything bubble. It's a long story, but the major bubble that we're in is AI and tech. So similar to the .com, similar to housing, you have bubbles. You have things that are overvalued and get overbought, and then get, the bubble pops. So NASDAQ almost always leads, especially to the upside. And it's almost always relatively strong to the downside, meaning if we're down 1% on a day that's normal, if we're down 1% on the ES, the NASDAQ may be down 0.75%. Now, when we start breaking support and we start breaking down in bigger pullbacks, inevitably the NASDAQ is leading because tech is getting slaughtered and it's pulling everything down. So tech is always going to be the one leading, where ES is catching up right now because that's where the bubble is and that's where the Mag 7 basically reside. And that's always going to be the case while we're in this bubble. Now, we're also in a credit bubble, we're in a housing bubble, we're in a debt bubble. So there are a lot of problems in the underlying economy that people don't pay attention to or know about or just even understand, because it's you have to actually do some research to find out what's going on. Banks are in very big trouble. There's going to be another banking crisis soon, and I think it will be way worse than the Lehman Brothers crisis. You have commercial mortgages at the highest debt rate ever. You have house mortgages or default rate ever. You have homes reaching very, very high default rates again. You have credit card at one of the highest default rates it's ever been. You have used cars at one of the highest default rates they've ever been. You have shadow lending. You have all of this overexposure that the banks can't manage if there's any kind of problem. The Fed is actually there's several $billion in debt. So if the Fed prints more money, that's just going to devalue the dollar even more. It's going to cause a slide in the dollar, which will cause a slide in our credit, which has already happened. It's going to cause a devaluing of the dollar and a potential replacement of the dollar as world currency. Homes are going to be dropping in prices like rocks because nobody's going to be buying them. Rent's going to be climbing like crazy because nobody can sell a home. It's going to be great. It's a lot of good times. Perfect analogy. Thanks. Hence Max Pain. Yeah, I mean, Max Pain is all derived from exactly that. Where is the most pain for all of the options prices? Um, I think it's kind of arbitrary in the sense that it's hard to keep it around max pain because there's so much money moving around in the market, especially with online um, investing now. But yeah, that's exactly where max pain comes from. But we can still make money with this indicator. Absolutely right. That's the whole point of it, is to help you when the markets are doing weird things. You know, when you say the markets can't go higher, the indicator doesn't care what you think. It just tells you buy. When you say the markets can't go lower, the indicator doesn't care what you think. It says sell. And it's a robot trading without emotion, and that's the beauty of it. Because the market, guys, is an emotional being. I say being, I realize it's not a living thing, but it kind of is. It's controlled by money of people, and people are naturally emotional, extraordinarily emotional these days. I mean, you can't say anything to anybody without them flipping out and wanting to fight or cancel you or block you or dox you or whatever stupid things they do. Nobody can control themselves anymore, so emotions are higher than they've ever been anyway. Um, oh yeah, you add to all of those things I said civil unrest, and that doesn't help. Um, but it's controlled by people's money, and people are emotional about their money, especially because that is their livelihood, that is their future, that is you know, their life. So when it starts going down, people have folie, fear of losing everything. When it starts going up, you have fear of missing out. Um, and it, especially in day trading, the market is just a series of traps. It just wants to trap you. It's not so much in things like buy and hold, because people have come to be conditioned that the market, when it goes down, should go back up, and when the market goes up, will come down sometimes. Um, that's not exactly true, but um, for the most part, it's been true for quite a while. Um, so emotion is what pushes the market in the directions it goes, and emotion is irrational. So when people were like, "How can this go higher?" Well, because emotion is irrational. Think of all the dumb things you've said or done when you broke up with a girl or a guy, and or they broke up with you and you were in love with them and they don't love you anymore. Think of all the stupid things you've done when you're mad, and gotten fights. Think of all the stupid things. I mean, the most of the dumbest decision you make in life are because you're overly emotional about something. And that's what controls the market. So when you say it can't go higher, yeah, people can push it higher. When you say it can't go lower, no, it can go lower because people are irrational, because emotions are irrational, and the stock market is irrational. It has nothing, absolutely nothing to do with the companies in the market. It really doesn't. I can show you thousands of examples of the market moving in a way that doesn't make sense according to the news or earnings reports or the president or geopolitical issues. Thousands of them. Silver has a new all-time high. They broke out finally. I had not looked at silver today. So we've been in the metals complex for a while. Let's go down to see. This is a big deal, guys. If you understand the metals, you'll know that silver breaking out. Let me zoom. Let me look at this on a different chart. Hold on. I'm going to go to a different chart. Okay, so they spike. Oh, no, this is ES. Got to get to the right chart, Jake. Duh. Come on. Where are you at? So I've been saying for a long time that silver was flagging, they needed to break out of their flag. And if they did, they would race heavily up. Gapping above this high right here, they should be able to get to, and of course, nothing moves in a straight line, guys, but I'm saying very quickly we should be 37. And overall, we're targeting 50. So might be ready to go here on an epic run. They've been consolidating, broke out. We can look for a little bit more consolidation because this is a pretty big breakout, and then it can really run. If you're in my room in 2024 in April, I told my team to get out of the S&P 500 and into, oh, what happened here? Thought I hit load there. Well, TradingView's not cooperating with me right now. Probably my computer, honestly. At any rate, I told him to get into the metals EKWAX, EKWAX. Here, I can just pull it up here, I think. Precious metals, we bought it last April at 49, 48, and it's at 90 now. So I put my retirement into that right now in the metals complex. It's sitting at 90. And we bought it at 48, so what's that? Almost an 80% move up. So these are the benefits of trading with me and being in my room. Your retirement, instead of going sideways to down all year, has been skyrocketing. So, yeah, the metals I've been high on for a long time. And they are delivering. Do you ever use low time frame EW theory to find confluence with your indicator? No, just because the 5-minute chart on EW to me is kind of a starter. I mean, you can certainly say, yeah, there's a setup for a 1-2-1-2 or something here, and if you get a buy signal, that's great. But the 5-minute chart's so wishy-washy in EW that you really need to build bigger structures. I use it more on, like, say, the hourly chart to get confluence with maybe the weekly. So if you have a nice setup for a buy signal on the weekly, and you also have on the hourly a 5-wave move that you're expecting or something like that, yes. On the lower time frames, not as much. You have put your dollars somewhere. You have to put your dollars somewhere. Gold is too expensive. Crypto, not sure. Yeah, I mean, now the metals move is getting near its top. That's why I've taken some off of the metals. But, we got in back a long time ago when it was ready to break out. Crypto still, I think, has a run left to 130, 140, at least Bitcoin. I don't track any other crypto, honestly, but I think Bitcoin still has a wave up to 130, 140. Jacob, in 1986, I sat in a room full of people listening to Robert Prechter. You sound like Robert. Well, thank you. That's a very big compliment. When you were in love, you really did stupid things? No doubt. Let's not forget a bunch of people were convinced that every Tesla driver was a Republican voter. Yeah. If it really matters, Trump did text a 1.5 conversation with China Xi and said things are moving forward with another formal meeting. Yeah, and the move was big for day trading, but it didn't really change. It wasn't an exponential move. It was just a big fast move for day trading where a lot of volume came in for no reason. I'm late. Did that buy signal get stopped out? It did after a profit, Will. So we made money, then it got stopped out, then it went back up. So do you trade live daily in your group? I don't trade live like this, but I do trade, like, you get all the indications and you can set up alerts if you want. But yeah, we trade every day in my room. I just don't do live streams because it's a lot to type and get all the information out. And live streams have a delay, so you can't get accurate trading entries. Um, so I have to get the entries into my room and also um, make sure they're accurate, not make mistakes. And when you're trying to live stream, answer questions, do that, watch prices on options, do all that kind of stuff. It's a lot. So no, I don't live stream every day, but I do a daily call at 10 where I go over everything. We trade until 10 every day, assuming the market is, if we have a trend day, then, I just hang it up until 10 because there's no reason to trade it. But assuming the market is giving us setups, we still take them, yes. So we're coming into this consolidation resistance zone here. They've rejected it twice. They're back into it again. This is also a key level right here, this weekly high and today's high. So the actual printed high is right here. The pre-market high is up here. Anytime you get above the printed high, that usually causes a little bit of a push because it's a change in character of the market. Market opened and immediately went down. Now they're back up to where it opened and trying to go green. So always something to keep an eye on. I know we're green in price, but I mean green from the open. So they could squeeze here up into the pre-market high area, and we'll see what happens there. If they get through that, I'll probably go ahead and end the live stream because they gave us a fake breakdown. And typically when that happens, they're going to take it to at least the top of the range, which the printed range is here. If they get through that, then they're going to take it to the pre-market high range. But we might get a sell off of this level, so we'll see how it goes. Proctor's been calling for a super cycle top for the last few years, many years. He has been too far ahead, in my opinion. He's very good at what he does, but I think that he was a little too excited about the top being in prior to COVID, even during COVID, 22. I was on board in 22 because they broke some key support. But in all honesty, if you went back and watched my videos in 22, which are on my channel, I was calling for a wave 4 pullback to about 4,200 or so, and then one more high towards 6,000. It's really hard to predict diagonals. They came down and broke support, major support, which indicated that the top might be in. So I had to shift to that view. But they played out this diagonal to where? 6,000. So even back in 22, when we topped, I was still looking for one more high into the 6,000 range. The only reason I changed my opinion in October of that year was that we broke below, essentially that wave 4 got into wave 1 territory, which typically tells you that the move is over. So obviously that wasn't the case, and I did have to pivot back once the diagonal started building out. But even during that time, I said that around 3,600 we would be back to 4,000 and plus. I think maybe even 4,200 plus. I don't remember. I have to go look. But anyway, Elliott Wave, if you understand how it works, is so powerful, and key levels are so powerful that you're just able to have, especially in normal markets. So up until 22, the market was considered normal, meaning no diagonals. And not no diagonals, but not giant ones like we're in now. And when the market's like that, oh my gosh, you just crush it. But when you're in diagonals, everything looks the same. So it becomes really hard. The whole point of EW is that this kind of structure is bullish, this kind of structure is bearish, and then that means this kind of structure is coming again. Well, in diagonals, well, that's not the whole structure, but in diagonals, you get 3 waves, which should be a corrective move, and then you get 3 waves again, which should be a corrective move, and then you get 3 waves again, which should be a corrective move, and they all are corrective moves, but they build out an impulsive move. So you have 5 waves made up of 3 wave structures, and that's not how it typically is. So it's become infinitely harder to identify the moves over the last 3 years, and we've still done a really good job of most of them. So at least I think we have, but that takes some, for me, I think it takes some market understanding, and then understanding that there are always going to be 2 paths, and there are key levels that kind of identify those paths. And that's what people don't understand. They say, oh, you say up or down, so you can never be wrong. No, I say that this is what we're expecting. This is the primary. Here's the secondary. If it breaks the key level, then the secondary becomes the primary. And that's just kind of how it moves forward. But if you understand the fact that the market can literally have infinite paths, I mean, you can do anything on any given bar on any given day, and you can take that infinite amount of information and reduce it down to a few key levels and patterns. That gives you a great big advantage over just looking at the chart and going, wow, that's a lot of squiggles. I don't know what to do. So that's where the power of it comes in. It's not that it's super predictive and perfect on its face. It's that it can narrow down how the market works into a small number of opportunities or small number of paths so that you can act accordingly. Is there a way you can recognize where those block trades you mentioned earlier are positioned? Yes. Now, so there's a website called volumeleaders.com, and they tell you when big trades come through on the markets, and they tell you where. Now, you don't know whether those are buys or sells. However, most of the time, based on where they are on the chart, you can kind of infer what they are. In other words, as price is moving down into a key area like this, let's say this week's average right here is the key area, and then at the end of that day, you see a big block trade right here. If this is a key level and there's a big trade on that key level, then it's very likely to be a buy, because they're saying, hey, this is where I want to get my money in, because this is where we should defend the market, blah, blah, blah. And you can get confirmation. You can wait a day or two and then look for, some kind of price movement. And very often those trades don't go through the same day they're put in, because they're so big, they have to kind of spread them out. So you might see them. You might see that trade come in, and you might see the market still do this for a minute and then this. Because they start getting the trade moving. So you can kind of infer based on where the market is, whether it's a buy or a sell, but you don't know that for sure. I mean, there are times that they trade breakouts that are at key levels. So, like, let's say this is a major, major, major high, which kind of is, but not exactly. And they buy up here. That can be set up for a squeeze to do this, right? So you just kind of have to, again, play the probabilities. If they're buying at a low, or if a trade comes in at a low, it's probably a buy. If a trade comes in at a high, it's probably a sell. But you need to look at that, and you can either wait for confirmation or trade it right away. That's up to you. But yeah, you can see where those are positioned. Volumes are also available on E-Trade Level 2 called Ladder. Yeah, but it's different. What Volume Leaders does is different. That is good information, Sonny. I don't want to discount your information. I'm just Volume Leaders does something that's a little bit different from that, is all. Getting a little bit of weakness here again. We're at the opening price, opening print. So this is going to be a key area for the bulls and bears to decide what's going to happen today. If the bears are going to try to make any kind of additional move, they need to do it basically here. If the bulls are going to press, they will squeeze once they get through this and go hit 599.73 or higher. Oh, hi, Dolly. I didn't know you were down here. My dog just came in. Okay, thank you. All right, there goes the push through. Let's see if the bulls are going to go ahead and squeeze this or not. How's Cujo the Rottweiler? Oh, that's Dolly. She's not. I mean, she would kill anybody at the front door, but she's just a big teddy bear. She is happy. She was missing the kids a lot because they left a month before I did. So she's very happy that she's back with the family now. All right, here goes the squeeze. Let's see if they run it up to 599 here. I have enough videos about market crash again. uh, if you're watching my stuff, I don't peddle market fear or market crashes. I just tell you what levels need to break for it to happen, and when it does happen, I do think it will be nasty. I think it'll be very nasty. I peddle profit. Hi, Pedal. If you want to make money, come trade with me. I'm going to give them a chance to get up to the pre-market high and reject and try to get a sell there. If we don't get one there, then and they push through that, then we'll likely call it for the live stream. Hopefully, you guys either made some money or learned something today or had some fun. If you did, please hit thumbs up and subscribe if you didn't subscribe. Make sure you take advantage of those coupon codes on the indicator. They are that yearly one especially. I just don't give that one out very often. I know I've said that a million times, so my credibility on that seems a little lacking, but there's been a lot of life events, and as a thank you to putting up with my lack of content lately, I decided to keep it going. So I do mean it this time. You probably will not see that for a while after this, so do take advantage of those codes. I've traded 3 days this week, and we've made money with the indicator all 3 days. I was traveling on Tuesday, so I did not trade Tuesday. That would have probably been a small losing day since it was a trend day. You would have had that one trade and then kind of called it. Guys, it works. If you just follow the course, follow the rules, keep your emotions in check, stay the course, follow the rules, keep your emotions in check, and give what the market, take what the market gives you. You'll be a successful trader and you'll be very happy. Q's broke through pre-market high. Okay, so yes, we'll probably catch up at some point here. That was the expectation. For them to go hit the pre-market high once they squeezed through the print, the opening print. And that looks like what is going to play out. So if the Qs are already squeezing through, that can be an issue. It doesn't have to be, but it can be. Yeah. So they're essentially saying, we set you up for a trend day down, failed it because they couldn't hold the 21, and then broke out to the upside, and now they're going to try to make a trend day up. We'll see how that ends up playing out overall. On top of the pre-market high, there is call resistance at that 600 level. So we will try to look for one rejection there, see how it goes. They did give us this stop run, which was super annoying. Otherwise, the indicator was spot on for today with the buy signal. What price do you think it will go? You're going to have to be more specific on that. Like the all-time highs, I don't know what you mean exactly. slow grind up here. I don't necessarily think, especially with, let's see here. Yeah, options prices have decreased quite a bit. I mean, that's going to happen throughout the day just because of time. But, theta kill on daily or zero DTEs is real, but they are not showing much volatility priced in right now, which means that this is likely a slow grind higher into this PMH area. Doesn't mean you still can't get a little winner back to the 21 or something like that. But I certainly don't think a major meltdown is coming. Let's see if the ADD has recovered very strongly. It's back up to 524 positive. It started at around 800, dropped all the way down to negative 250. Volt is positive across the board, so the bulls have come back in force and are controlling the market here. They just gave you a little trap to start the day. Got some shorts locked in down here for FOMO, broke some key levels, and then said rip them. And then cheated all the longs who got in at the right place here with a quick stop run before running it higher. So they kind of were jerks today overall, but that's their goal. Their goal is to be jerks. All right, let's. Sorry, let's see if they're going to. Let's see if we get a reversal here that we can play. They're kind of trading off this high right here that gave us this small move down. So I would not be. I always say the indicator is smarter than me because it is. Because it doesn't use human rationale, it uses numbers and only numbers. But I would not be super excited about a sell off of this level personally. But we always trust the indicator because, again, there's been so many times I've told my room I don't love this trade, and that trade has made us 300%. So, okay, not so many times 300%, but you know what I mean. The trade goes really well. No need to be super exaggerative. The indicator on your website, is it called the indicator? You have a lot of stuff on your site, so I don't want to pick the wrong one. Oh, you found it. I trade using Wyckoff and point and figure, and I found your earlier videos in Elliott Wave interesting, but still don't grasp it. But thanks. You're welcome. It's all about sentiment. Wyckoff is similar in that way of you're seeing distribution and you're seeing sentiment wane at certain levels where You're making nominal new highs and selling off of them, um, giving people this false hope of a breakout or breakdown, and then reversing it on them. It's just a different way of measuring sentiment. One that resonated with me. So Wyckoff is fine too. There's nothing wrong with that. Banks and transports still not buying this rally. It's always interesting to me. Banks, I mean, they're flat. It's not like they're way down, but they're red today. And Dow Jones is flat as well. They're relatively weak against the ES and NQ. And generally, those are things that are bought in strong markets. So if they are planning a breakout, they're going to probably play some catch up on the banks and Dow. But it's always a little bit of a red flag when I see these kind of things. So the market has turned dull. There is an old adage, never short a dull market. We've been doing this for 2 hours. We made some money today. I think I'm going to go ahead and call it here. Don't forget, if you want to take advantage of those you know what? I'll let this bar finish just in case it turns red. But after this bar, we're going to call it. They're just grinding too slow to get up to this pre-market high. And I would like to see them just move a little faster. The slower they come into that, the more controlled and stronger it is. So without any acceleration into that key level above, it is probably not going to be a great short anyway. So remember, those codes do expire in about 30 minutes. So if you want to grab those, do so. So you can get a discount on the indicator. It does come with a 30-day money-back guarantee. We've been using it for years, and it is just killing, guys. I mean, I'm upfront with you when I say killing. That doesn't mean every trade wins, every month wins. We are in month 6. We had 4 winning months in a row, and then May was down $2,000 for the year. We are up $29,000 on a $100,000 account, so that's 29.7%, $29,700 on a $100,000 account. So it absolutely prints money if you use it the way it's intended. You follow the rules and you don't lose your mind. You will do very well with it. So I appreciate everybody for joining me. We'll stay, like I said, I'll stay to the end of this bar just to see if they do turn down from here. But it's moving too slow for me to want to really be excited about a short should it come. So just keep that in mind. If you're using the indicator, you can absolutely take it. We haven't proven a trend day yet up. I just think it could be a little bit of a weak pull down, but they could come back. And I mean, I think the best you're going to see is a test of the 21 right here, which is 597.13. So that's a $1.50. That's not a terrible trade. But I think that's probably the max based on options pricing and how slow we're moving. But we'll see. If this bar stays red, I'll stay on for one more and we'll see how it goes. But I want it to be like not like a doji. I want it to be red. All right, we'll give it one more bar. If anybody has any questions, you got 4 minutes to get them in. Happy to answer them. Insider in the know, they said big institutions got in at the bottom climax and have let speculative hedge funds push it up. Just an FYI from a credible source. Institutions are on the sidelines at record levels right now, so I don't know. Smart money has been pulling money out of the market at record levels, so I don't know if I buy that, or maybe they did and now they are maybe they did get in at the low and they've been pulling money out up here toward the high because they are at the highs. But I know that they are on the sidelines right now in record numbers. Hi, buddy. You wanted to come say hi? Lincoln wanted to live trade with us, guys, so he came in to say hi. Did you sleep well? What time did you get up? Good. I'll come out there in just a minute. I'm wrapping up. Do you tweak the internal formula of the indicator? Is it pretty much done? We're always looking to improve it. So we always review the data and say, is this something that is a constant? And that's really what you're looking for when you tweak it. You're looking for a constant flaw. Or is it just kind of a one-off, hey, we had a losing trade and there was no real identifier? So we're always looking to improve it. But for the most part, it is, okay, we just got to sell there. Hold on, let's do the sell. So we're going to get in at 598 at 98 cents. Give me 1 second here while I get the room updated. And our stop is going to be 599, or actually 598.95. Again, I said I would not be excited about this short, so we'll see. The indicator, it's smarter than me, so we'll see how it goes. Let me make sure I got all my numbers right. Put 598.98 cents, 598.95. Okay. So our first take on this one would be basically $1.20. $1.18 is the technical number, but sometimes I round just depending. We could see them come back and either test the breakout area right here at 597.57. So when they broke above the opening print, or test the 21 down here at 597.26. If they get through that, then they can start talking about having a real move, but otherwise it would be just a little pullback here and continuation. So we'll see if the bears are able to get anything going here. So to answer that question, I wouldn't say it's ever done. We're always reviewing the data, but it is at a level that we're happy with, that we have it in production and we have it out to the public. So always looking to tweak it a little. What is your view on PLTR? That's a great question for my afternoon call. If you're in my room, I go through any stocks you want to ask. You can join that call. If you're not already part of my rooms, you can join that call for $5 to see what it's about. And then if you like that, you can just join the room where you get that call every day. You get a closing call most days, Monday through Thursday, and you get a morning call every Monday, as well as all the trades and everything else. The flickering here is about the NASDAQ. The NASDAQ isn't playing ball. So we'll see. We're going to need it to go ahead and reject. Otherwise, it's going to pull the ES up with it. We thought we were going to shut down, and they suckered me into a trade. Let's see if it pays off. what is the next target after 60.16? I'd have to go look at the ES. Let me stay here for a minute for this trade. It's seeing weakness here, obviously. I mean, it's tried to sell for 3 bars now, so um, a lot of time this weakness can just be consolidation. Like we talked about earlier, they can consolidate and let the 21 come down to price. In this case, it would come up to price, but hopefully they go ahead and follow through here and come back and tag the 21, and that would give us a winner at least, and then we can see what happens from there. All right, if they can break down below that low right there, that should lead them back down to the test the breakout at least here at 597.64. You like to see some acceleration when they get through this low. So if they can, this one right here at 598.23, you don't want to see them back off of it. You want to see them kind of push through it and accelerate into this consolidation right here at 597.67. It falls hard when it crashes. It does. Do you know why? No, you don't. Noah Schwartz says emotional damage. Kinda. It is definitely emotion. It's that fear is greater than greed. So, which makes you more uneasy? the market going down and your money going away, or the market going up and your money growing? The obvious answer is the market going down and your money going away. People are much more scared to lose everything than they are to get more money in and be greedy and move the market up. So the market grinds higher because people, they put in their weekly investments and they put in a little money here and there, and then you sometimes get to the mania point where people are like, "Oh my God, we got to get in! It's so crazy." But most of the time, people are far more fearful of losing all their money than they are watching the market go up. So they panic, they sell, get out of the market, which causes the market to continue to panic to the downside, and then realize about a week later that they sold at the exact wrong time because the market's back above that price and climbing higher, and then they don't know when to get in exactly, and then they wait too long. And anyway, but yeah, so it's about fear being greater than greed. Traps, bulls, stop hunts. Kinda, not exactly though. We're talking about bigger crashes where people act. We're not talking about a 1%, 2%, 3% day. We're talking about when the market drops 10%, 15%, 20%, and then it drops fast. It traps bears, not bulls. I mean, yeah, it can. I mean, obviously, if the bulls are getting in late, they're going to trap them at the top. But if you haven't watched my second episode of my podcast, I explain this in pretty great detail of when you have a key level. So you have this high volume level, you see these big red bars going down. People are scared to buy because they think, oh my gosh, it's breaking support. It's never going to go back. And this is only a small move. This isn't really one that would get people emotional. But the idea being they come down into these levels fast, the shorts get in late, and then they reverse it on them and do that. That kind of stuff happens, but I'm talking about the stuff where people are selling their 401ks to cash, people are selling all their stocks, people who are new to buy and hold and don't understand that the market's going to pull back and the market's going to ebb and flow. They all panic, and when panic and capitulation sets in, that's when what can causes the market to really, really rip to the downside. Um, so the market is typically going to move down very quickly. And it's also liquidity. So the bull trap sentiment, I see what you're. So when you need liquidity, right? The market can only go up for so long before there's not going to be any more people to buy from. So so there's two things that happens. Number one, the market continues to grind higher. Okay, so people stop buying because the price is not an attractive price anymore. And two, people don't want to sell because they keep getting lit up by selling and the market just keeps climbing. Well, at some point, if there's no sellers and there's no buyers, you get stagnation, right? And so what happens is institutional money says, well, we want price to go higher. We can't do that without taking it lower first. So what they do is they sell really hard and strong, make all of the bulls think that it is over, get bears in late, come back to the level they started at, and then they flip the switch on everybody, buy it back up, reverse it, and squeeze everybody who was trying to sell this market late, and then they are able to build enough energy to take price higher after that. So those kind of liquidity grabs happen for sure and stops. But I'm talking about the overall general sentiment of the market is fear is greater than greed. Indicator's maximum candles between three tickers is the indicator 2. Yeah, the standard setting is 2. If you're on an individual stock, you can change that setting to 1. Should have married a rich wife and traded with her money, then I would not be concerned. Yeah. Glad I ran into your channel. Want to check out your lessons, but my boy got a lot of sports coming up in the next few weeks. Hope to check out your stuff soon. That's awesome, Non-Zero. I'm glad you're here. I'm glad you ran into it too. I'm here to help, and if you come to I live stream every week, once a week, usually on Wednesday. Well, okay, so it was Tuesday, and I moved it to Wednesday, and then I couldn't do it yesterday, so this week it was Thursday, but typically on Wednesday. So if you aren't able to get in the lessons or stuff, you can come here and ask questions and follow along until you're able to. They need to start stepping it up here. Otherwise, this is just consolidation and then continuation. Your market prediction is not a crash, it's a path down, and then you have a thinking face. Are you saying that those are the same thing? My expectation. Okay, we just we just got stopped out there. All right, give me 1 second here. So my expectation is that the market will have a bear market that will last quite over a decade. However, before anyone mortgages the farm or sells their stocks or does any of that, key levels need to break, and they haven't. So it doesn't. It's not a crash; it's a path. They have to break a key level, and then there will be moments of sheer panic. There will be moments of crashing. People think that a stock market crash, is like COVID or like the Great Depression, and there will be times that there will be moves similar. Should that path play out that I expect, but that path is just an expectation or a theory until the key levels break. And until then, we treat this as a bull market because it is. So there's no peddling fear. Like I'm here to tell you all-time highs are likely. And then after that, we'll see what happens. But there's no it's going to crash straight down talk, because that's not generally how it works. markets move down in their first push, and they come up, then they crash. And this is typically the C wave of the crash. And if you look at, since we're done for the day here, if you look at, let's go to the ES chart. Let's go back a few years. So if you look at the ES here, you had your, right here, initial move down, then they came back up toward the highs, then you had the crash moments, then they came back up, then you had the crash moments, then you get this ABC up, then you have a crash moment. So there's a bear market doesn't mean, and a crash doesn't mean it's just going straight down to a price. It means that the top is in and it's going to go through a path that is very long and detailed to the lows. So the peddlers of fear want to use the word crash a lot, and the talking heads on TV are, in my opinion, scam artists, because they peddle nonstop some stupidity and some nonstop bullish, and then the peddlers of fear. Like, there's nobody reasonable on TV that says, you know, we are at a critical junction here. Every one of them is, oh, I'm ready to, you know. But anyway, my point being, when you say things like good news is bad news, I'd lose respect for you instantly. You don't get to talk to me anymore about the market. I mean, I'll listen to, or I'll help you, but you're not going to tell me things about the market when you say things like good news is bad news or bad news is good news. Those are absolutely ignorant statements, in my opinion, because they are simply made up to cover why you can't figure out why the news does not control the price, even though it's presented to you repeatedly. So peddling fear, peddling nonstop bullishness to me is stupid. Like I said, I peddle profit. I just want to make money. I don't care what the market does. And the path to the downside will have crashes in it, but it won't be a straight down crash. It's you know, the people who talk about crashes want clicks. That's more about getting clicks, and we call it bear porn. I try to peddle reasonable paths in both directions with key levels so that you understand when those key levels break, what will happen next. If they don't break, though, then it doesn't change anything. Okay, we are going to wrap it up there. That last short, they popped us out of that with a quick stop out. So we will be closing out the live stream. Remember, you got about a half hour. I got to get people set up with the indicator who bought it. And then after that, I will turn off those codes. So if you want to use them, take advantage now. Make sure you enter them and get that taken care of so you don't miss out. We'll do this again next Wednesday. I will also have content starting again next week. And if you want everyday content, I'm always in my live room. I'm always giving updates in there, whether I give free YouTube content or not. So you can check out the rooms as well. I appreciate you all being on this stream. Have a wonderful weekend. Have a wonderful evening. And we'll see you next week.